The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends. And what an interesting day do we have. Tried to push higher earlier in the morning, got to 2060 on the S&P cash, but we've faded since then, even with the juice in the crude market, not enough to move this market higher. 2.5 billion shares as we start the show, so we're going to see. I continue to suspect and theorize that we have a buyer's strike, or a seller's, and a kind of a seller's strike, but less buyers and not a lot of sellers. But at that point, it gets one of those weird kind of markets where truly you do have a market where it's just a little bit more on one side than the other, but there isn't a whole lot. We've gotten to 2046 on the S&P cash, but my guess is that we're now into Thursday, unlike last week where we had people try to buy going into the weekend, just assuming we'd have another big rally on Monday. My guess is that they've probably learned their lesson by now and are thinking discretion is the better part of valor, and we'll stand back into the weekend. As I said, I think we're going to just slowly creep back down to about 1920. Don't know exactly how fast that happens. Maybe by the end of May, maybe by the end of June. Very hard to tell in this kind of wistful light and just lack of signals market. We had some good signals last week, as we said on this show, and when I hosted the Tom O'Brien show, we went short and started going short, I don't know, 8 days ago, 9 days ago. Well, we picked off one of our shorts already, made a little money on it, but of course, I don't like making a little money. I like making big home runs, and of course, if you're a home run hitter, you're going to strike out some. So when you hit home runs, they got to pay big. A little bit of money or even good money is not enough. You need to make great or fantastic or, of course, even obnoxious amounts of money. I think we can do that in the daily newsletter and now in the more and longer investment newsletter. I think we've gotten at least a few signals that say that we are in a downtrend and can pull the trigger short. But we shall see. As always, we meet at this time of day.
The following takes place between 2 p.m. and 3 p.m.
And as always, we like to do and start with a little history, because if you don't know your history, then you're doomed to repeat it.
That it's all just a little bit of history repeating.
On this day in 1818, one of the biggest things in economics ever that will happen, Karl Marx is born in Trier, Germany. His life work will inspire some of the most constructive reforms to capitalism, such as safer factories and expanded rights for workers. Unfortunately, he goes down the road of just about everybody that dabbles in socialism or communism, and probably morally responsible for the future murder of nearly 100 million innocent people under communist regimes. Of course, probably the best quotes about socialism and communism as aspired by Karl Marx are from Winston Churchill, who said, if you're not a liberal at 25, you have no heart. If you're not a conservative by 35, you have no brain. And, of course, the other one I love, the inherent vice of capitalism is the unequal sharing of blessings. The inherent virtue of socialism is the equal sharing of miseries. And I can't think of a better book that made my thinking and reasoning on this matter more clear than a book from George Orwell that came out in 1945. Although he wrote it one way, everybody took it another. He was deep in believing that socialism was the way. By his death, he had to admit that he was probably actually writing about socialism in totality, not just in the Stalinism that he thought he was writing about when he wrote it in 1945. And of course, why my little title slide for the last few days has said, 4 legs good, 2 legs bad. And if you haven't read that book and you vote, I think that maybe you should read that book before you do. It's not a book about political beliefs so much as human nature. And that is that eventually, because of its inherent weaknesses, i.e. socialism, one person eventually ends up running the show. And as we've said before, socialism is either communism sold by the glass, and of course, communism starts with a gun to your head. Socialism ends with one. And we can only think about those things as we go on. But proof is in the pudding. We've tried these kind of things. Why didn't everybody just say, let's just go find out what they tried in Detroit? Let's not do that. When everything blows up, if Chicago's the crime and murder capital of the world, maybe they're doing something that maybe just is not working. Why can't we just go and say, hey, this stuff doesn't? But, of course, being wrong in the stock market, we know we're wrong. Why aren't there stops in politics? Just one man's opinion. Other things going on today, of course, are Tesla, and watching a lot of earnings out here as we do drift a little bit lower, 2049 on the S&P cash. A lot of discussions. We brought this up yesterday. Of course, the shares are down. Last I looked, around $211. It's kind of sold off here. Most of the people finally getting around to admitting that at least some of the naysayers are probably right, and that Tesla will, if they are anywhere close to actually telling the truth this time, they've been big, or Elon Musk has been big on over-promising and under-delivering. And again, fine company, great car, but it doesn't matter. It all eventually comes down to the dollars and cents. And where the rubber meets the road today, Tesla is off about $11 after being up after hours to about 2038, actually opening at about 228 and now at about 211. We shall see. My guess is that at present valuations, Tesla comes out to about $40 a share if you actually believe the long-term story for Tesla. If not, buy a Tesla, invest somewhere else. I think that it has nowhere to go. But true believers, doesn't matter. You believe in socialism, you believe in Tesla, you believe in something, reality does not really matter all that much. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we had a slew of earnings. Continental Resources, a CLR, out. And let's see what we have out there. CLR. Why is that? There it is. Up at 12% on the day. We'll look at these charts in a little bit. Had a loss. In fact, a lot of these stocks were just so short that when they didn't blow out the losses, they actually did a little bit better. This one had a net loss of $200 million. But people are out there buying it anyway, up $4.25 because they thought it could be all that much worse. Other stocks getting the loser horn today, and not only getting the loser horn,
I informed you thusly.
Yes, I informed you thusly. That is DDD. It's been off a couple of days after earnings, of course, well off that $19. But no big surprise out there after a stand-at beat where they basically put everything into one quarter to make it look good. And keep it above $10. We've talked about this phenomena for a while, and this is where you have to really watch about stocks that go under $10. As we said about earnings and fund buying, there are some reasons that are just fixed in the market. They are organic because of rules or other reasons, and things happen. Options expiration causes a significant and statistically significant move in the market every month. We also see, of course, fund buying coming in. Other things that we, of course, see now is that some of the charters in some of these big funds have a thing where they will not own stocks below $10. One of the reasons why is the volatility got higher. It used to be about $5. It's gone up to about $10. A lot of this because of Dodd-Frank. They basically put a lot of rules and regulations about always knowing your risk. And one of the biggest problems was stocks that have huge moves below $10. So therefore, most of the funds, once a stock is under $10 for a while, have to get out. But most of the time, it's if they're under $10 for 3 months, then the fund has to get out. So if you're a CEO of a company following a downtrend of $97 to $6, like 3D Systems was, you have to do anything by hook or crook to get your stock back above that $10 and make sure that it does not stay under there for more than 3 months in a row under that $10. That's why they have it in football called the goal line defense, but fairly, I've seen a few more than a few scholarly articles about this $10 move. And most of the time, CEOs will go, well, I don't really care about the price of the stock. What they do care about, though, is once it gets under $10, Dodd-Frank, value at risk models, a variety of economic issues come into play that don't matter whether you're going to do better or not. You've got to make sure that at least the people that are your big long-term holders don't start to bail, because then what happens, you get under $10, then the cost of money becomes incredibly expensive for you to keep going. This, of course, down on fairly decent volume, but I gave you I informed you thusly as we had a phone call, was it last week? I think it was last week, last Thursday or Friday, about DDD, and I was pretty sure this thing was at least coming back to $12. They basically threw everything in the kitchen sink and surprised everybody, ran a bunch of shorts. But what will happen over time is they will not be able to cook the books, or at least gently roast them as much as they've done the last few times. Everybody believes that you come to a low, and it is a low. It is not a low until it's been retested. That $6 low has not been retested in 3D Systems. I would love for it to be retested and come in with lighter volume and see that the selling is over, even if it is at the expense of a lot of those very high-end funds that eventually have to sell. Once it's all washed out, others can buy it. It'll get back above $10, and the funds sometimes will flood it back in. Normally, they'll wait until it gets to $20, and then they'll decide to buy. But I'm waiting for a fire sale on this one. I think it will be coming. You can give me a call at 877-927-6648. You can email me at path@tfnn.com, but we will persevere in the meantime. ETE, Energy Transfer Equity, said its multi-million-dollar takeover of Williams Companies in danger of falling apart. And, of course, that's good news if you're long ETE, up about 7%. Not a huge move, but at 1304. Most of these big deals, we talked about this, I think, on Monday or Tuesday. This looks, from what Bloomberg reports, that nobody thinks that any of these big deals are going through until we have a new president, that they're pretty much done with them. And as a lame duck, could care less. Apache beat on the numbers, up about 5% today, up 269, and 53.42 on the last move. Take a quick look at Apache APA. What else do we have? Up a little bit, still in this kind of uptrend off the lows. It has dipped below, significantly below its 9-day moving average. If you were to see any kind of weakness now in Apache, you really want to get a close, if you can, above this 9-day moving average. I think you're going to get it in the next couple of days. But after that, you get any more weakness, you can probably, if it qualifies as a double repo, which I think it does, almost the entire market does, look for a move back to where these things started. In this case, it would be back to this big first day, a sign of strength, which goes back to March 2nd, and the low of the day is 38.33. The high of that day was 42.01. I'm looking for it to come back into that candle on a failure with the general market. What else do we have? Costco reported flat same sales growth story, or about 3%, excluding negative impact of gas deflation, currency headwinds. Currency, the results come in below consensus by roughly 1%, or 100 basis points. Back up with the chart. COST. This thing, I think you can make a claim, is in a downtrend. Certainly headed back down at least this 141, which is the February 8th low. I don't know if you can see it stopping. Amazon certainly looks like it's putting a hitch in any of the decent margin stuff that both Sam's Club and wholesale clubs like this are doing, along with some other stuff. I don't see a lot in here. Volume has picked up today. Let's go check back into the markets as we move along. Still not a lot of movement, 2049 on the S&P cash. Volume has gone extremely light, 2.66 billion shares. And on to our next stock. LB Brands came in with same stores sales 1% versus the guidance. But this one may be getting the loser horn. We'll talk about this when we come back. It's L Brands, not to be confused with M Brands or H Brands or I Brands or any of the letters around L. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
As we talked about, L Brands, probably for the losing horn. Off $9 today at $70.29. And I don't know if you can say anything other than that. LB, get to it. But these stocks are not giving you a lot of warning This was already kind of down at the lows. You had a high volume low. You really needed to see that April 12th low tested with light volume, 75.91 on that one. Blew through it today, had all the volume in the world. So now we need to go back and start looking on even a longer term level. And, you can go back here, see if you can even get any kind of meaningful or statistical bar in that huge move up. I don't really even see anything. I can keep turning this up. But man, I'm going to say that probably the best you can hope for, just from eyeballing it, is looking back around October the 15th of 2014. The low of that day came in at 66.78. So I think you got at least that kind of 67, 66 on this thing now that it's broken down. That 66 is probably the beginning of it. The stronger probably support would come in the 62 to 63 range in L brands. And of course, you know these guys. You just don't know that you know these guys. They're one of these companies, of course, that has so many things that you just really never know what's going on. But Victoria's Secrets, I know her secret. Bath and Body Works. Bed and Body Works International. All the kinds of stuff that they sell, all kinds of candles and other stuff. Anyway, things aren't great. What can you say about it? But you know them, but L Brands doesn't sound like Victoria's Secret, does it? No, it doesn't. Give me a call, 877-927-6648. Email me, as many have. We're going to try to get to those as we have time. But email me at path@tfnn.com. Yeah, traffic in malls and regular stores. I've been around and out lately. Seems extremely weak. But what else can you say about that? What else did we have out here in earnings land as we go through it? Qorvo reported 2016 fourth quarter financial results. The most interesting thing to me for Qorvo was looking at how Apple moved. Everybody said, well, man, Qorvo's moving because Apple's selling a lot of those 6 SEs out there, and just not a whole lot going on out there. But that, anyway, it just seemed to me that if the rumor that everybody was spreading around, i.e., that Apple has just got to be selling so many of these things in China, that you'd see a move in Apple to the upside after Qorvo's earnings. I suspect that Qorvo's numbers have nothing to do with Apple and everything to do with a bunch of inexpensive or even medium-priced cell phones hitting the market, and nothing to do with Apple. Apple, of course, down $1.20 at $93 now. Massimo, I always want to say Massimo, recorded earnings 53 cents per share in the first quarter of 2016, which beat SAC's estimates. As we look right now, where is that? Did I forget to put that on my list? I think I did. MASI. We will take a quick look here. Up 8 and let's call 9%. Let's take a quick look at the chart. MASI, right? And well, you got to say that that you've got the volume. Man, how many charts have we looked like this, where they've gotten to these highs and they've just run out of gas? Even the one that everybody said that they had to own, which is Facebook, still kind of languishing right around where it was at the highs. Another one that ran through its previous high, now having problem with the August 5th high, $46 and 1.2 million shares. You already have 1.1 million shares. 46.15 right now. So you're 15 cents above that previous high. But even the ones that tend to be blowing out earnings or really surprising people, still having a problematic moves. You got to 120.79 on Facebook. This thing just continues to hang around its previous high for Facebook, and the same kind of things going on. Just they can't reach escape velocity. Probably the best way to describe it. Weatherford International released its Q1 financial results. Total revenue of $1.58 billion, down about 43% from $2.79 billion in Q1 of 2015. That will tell you quite a lot even before you look at the chart. But even looking at what they are forecasting, things do look rather bleak. Down $1.76 today at 572. WTF and or WFT. You have to watch about the symbol on that one, don't you? Okay, we're down here. The last big low was January 20th, $4.95. 26 million shares. You got 43 million shares already. Kind of into that candle. I think you can make a good claim. My guess is this at least makes it back to the $5 level. And if we look at this one long term, of course, July 24th of 2014, $24. And my guess is if we even go back further, that was it. So hit its high on July 24th, 2014. I thought somehow I kind of vaguely remember this being even higher than that. But maybe it was because it split and it's come back down. I'd have to look at it again. But pretty much it. What do we got? Fitbit, another one down. Of course, it gets the losing horn also. Apparently, everybody loves their Fitbits, but they can't make money. Not only that, but they say they're going to have to spend a great deal more money, losing money before they can make any money. And right now at $14.12, off almost $3, headed down on volume to its at least previous low of March 30th. If we look at there's a couple of lows, but you never really tested this $11.91 low that had high volume, 16 million shares. And even if you just look at these lows out here, 40 million shares on the 23rd of February, none of this looks any better. And, you know, once these things move under the 9-day out here, these things do tend to gap down and don't give you a chance to get out, trapped like rats in many of these stocks that have reported. When we come back, we're going to get into earnings after the bell tonight. And as we go to break, what do we have out here? 2049, market's still stuck. 2.75 billion shares. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And TripAdvisor came out, reported adjusted first quarter earnings of 2016, 22 cents per share. Missed its estimates down a bit. It was actually down quite a bit after hours last night. Everybody pumping this back up. Of course, only can you continue to talk about the China story for so long. This thing has been in a very tight trading range. I suspect a lot of distribution. And as soon as that's over, probably a trip back down to the $53.48 low of February 10th. That has remained untested off that low. You're just maybe you can even make a case that this is an ABC down on this. It's not uncommon. You know, I think we write, or a lot of people write ABCs as just 1, 2, 3. It's not uncommon to see an ABC go sideways as long as this one did. Let's see, expansions. Let's take a look at this. You know, even with this move to the side here, you could see a 1-to-1, which would take you to $34.26. And there's enough back here in that $34 range, including a gap, to get you into that range. So I would not be surprised. Let's take a quick look at Expedia. We already saw, of course, Priceline blow up. Expedia down a little bit on this. Everybody's kind of whistling past the graveyard on the Priceline numbers. It's, you know, it was down heavy yesterday, down a little bit today. My guess is that you get at least on this move, a move back down and fill this gap. That gap goes to the gap up that happened on, what is that, the 17th of February. But the close on that day was $1,110 on the 16th of February. And I think that you probably have enough juice to the downside that any market pullback takes you back to that $1,100. So we'll keep an eye on that. As we said, got earnings after the bell tonight. Bank rate going to be interesting. Loco, to this point, I'm going to say failed IPO in the fact that they sold themselves as a Chipotle, and really have not gotten off of that after the takeoff. Let's take it. Loco, L-O-K-O. You know, this thing, it's just been down, bouncing between $10 and $15. Not a lot to hang your head on this one, but I haven't seen anything that would tell me that anything is terrifically changed in that one. EOG Resources, a FireEye. I know everybody and their dog is short FireEye right now. If they come out with anything that looks interesting, they could run, but the problem is I have no idea what they're going to say. But $11.35 is what it would have to taste and test also to get me interested in this one. Again, you've got 12 million shares down there. Again, a high volume low is not a low until it has been retested. $11.35, February 12th, day that needs to be tested. And I'm hoping it gets back down there with a light volume. So far, the pullback off this bounce has been fairly light. They are in the right business, and I love what they do. But kind of like Fitbit, it just doesn't matter. They've got to turn some bucks, no matter how much I like them or any other ones. So we're back to flat, 2051 on the day, 2.8 billion shares. But who can say? Anyway, what else do we have going on out here? Oh, we were talking about earnings. I'm so easily distracted. Great Plains Energies, Herbalife, of course, the epic war between Carl Icahn and others that are short. Kraft Heinz. Can we just say Big Ketchup? KHC now. Big Ketchup out there. Melee, which I was short. The stock was shorted above 130. Covered it yesterday, I think at 124 and change or something. I was hoping this thing would go ahead and crater down to about 120, would be able to hold it through earnings tonight. In fact, I was kind of thinking when I saw the headline roll across about 1 o'clock about all the weakness in Brazil that I would have loved to continue holding this, but you never know what anybody's going to say. They can always fudge earnings one quarter. Unless you really have a overwhelming, or as I like to say, an abiding belief, I go ahead and exit stage left. So we made a few bucks leaving that one. But if there was one that was going to surprise to the downside tonight, I think that anything south of the border looks incredibly weak. Mohawk Industries, that one was kind of weak in not too long. HK, right? Yeah, you know, you had your pull back to 148.56 on Mohawk. That was February 9th. This thing's done nothing but rally, kind of pulled back a little bit here. If you wanted to go long, I really would have to see this thing get back to this gap about just over 170 to 174. But I don't know. Light volume, especially when you got back into this November 6 high. You certainly got into that candle at 3 million shares with about 470,000 shares. So volume kind of light. On the plus side, energy was about the same on the way down as the way up. So not one that I would be playing out there, more of a coin flip. Q Logic, Sun Power Corporation, Tereso, Theravance, Biopharma, he said. Ubiquity Network, Universal Display Corporation, and Yelp. And Yelp makes me a little nervous about what they're doing. The big reason why is I've seen a bunch of upgrades which seem to be incredibly dubious this week, right before earnings. And what do you have in that earnings cycle with dubious upgrades and people say that they're buying these things? Well, gap downs. And if we've talked about this stock for a long time as it having an incredibly weak business model, and that is what do you do to keep people from giving reviews out that are self-serving? And of course, if you give a review, are you going to give one if you think that maybe you're going to get sued? Yelp lost a lot of lawsuits, and those lawsuits had to do with anonymity for you posting. What they did find out through a variety of lawsuits, the biggest one being two dry cleaners fighting it out. So one dry cleaner decided that he was just going to write a bunch of horrible reviews on Yelp about his opponent. Of course, did a lawsuit, finally compelled Yelp to tell who was the person writing all these nasty reviews about their company. But you can't, that is the problem. How do you actually police that? And that's always been the weak part of the business in Yelp. And many other people, you can do the same thing. This is also another barriers to entry story. How do you do that? What I dislike is the incredibly lack of energy off this 1453 low. Bunch of dojis out here. Man, this looks problematic at best. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And had a request during the break to look at FireEye from John in Clearwater. Yeah, I see what you're saying. I still find it hard to place a bet going into earnings on FireEye. Just the opposite of Yelp. This went up high and to a high on good volume, and the pullback has been to this kind of smaller gap around 15. Let's call it 1570. But it has come back on lighter volume. So just the opposite of Yelp, where it's gone up on light volume. This one has come back on light volume. I love the business, but man, I've got to wait until some of these lows are tested. This one is $11.35. It could go up, and lots of stocks do without me. But discipline says that I need to get a signal, and that signal would be a test of $11.35 on light volume, and probably at least some consolidation before venturing on to that. We've got a lot of stocks kind of like that. In fact, let's take a look and see a few that I had in the newsletter that at least interested me. American Airlines Group wanted to see how this guy was doing out here. We were talking about this yesterday. It's broken through its previous low. You can go back to the August 24th low of 19 million shares, 2015. Pretty decent volume yesterday at 13 million shares, but not the 19. Today, about 8 million shares so far. But some of these at least coming back to what should be at least a little bit of support, but not seeing a lot. Allergen, another one down here, at least is trying to make it some tests that might mean something. Unfortunately, this thing has continued down after the high volume gap down on April 5th. On this one, the bright side, April 13th, what are we at? $212.67, 12 million shares. And we've gone below it, and volume has really not picked up. So there's a few out here that look like maybe there's something going on in these things, but man, not a big signal. Would like to see these things. In fact, you almost need 226 on this to get it back into the trading range for allergen. So it's going to be tough to make a play on these. Any of these tend to be a rather big bet. Illumina, check in on this guy. Of course, we talked about this one blowing apart. It's trying to get back into the trading range. I don't know if you can make a great deal of this. This was one of the first ones into the earnings cycle that really blew apart. I think it was about 2 or 3 days into the earnings cycle. Came down with 11 million shares. It has gone below it, kind of back into the trading range. Of course, Illumina makes DNA sequencing equipment, so they can tell you all about you and what makes you. They got a bunch of equipment. I always wanted to buy them. I loved the story going back when they were 80 bucks a couple of years ago. I just never could find a technical setup that looked good. I loved the fundamental story about it. Of course, that fundamental story has broken, like many of these, and probably just too many of these machines made. And now the question is, at what run rate did this company go on? When no one has big DNA sequencing machines, then the world's your oyster. Once there's a fairly decent amount of these things out there, they're expensive devices. Yeah, you get parts and orders and service for them. You've sold these to a great deal of institutions that need to do research, but eventually fulfill demand when you make big things. Kind of like Cray yesterday, same kind of thing. In the meantime, sell when you can, not when you have to. Hang on for the Tom O'Brien Show and then Andy Heck at 5. See you tomorrow, same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.